Just wait. Okay. Now we are live. Stephanie tried to jump the gun there. Okay, my name is Peter Renton, chairman and co-founder of Fintech Nexus. When am I going to get it right? We rebranded 3 months ago. Still.
And we got the right graphic on the
yeah.
image
Todd's got his graphic on. But anyway, this is the Fintech Nexus news show. We are delighted to be joined by a special guest for the first time, Stephanie Kirkpatrick from Orem. How are you doing, Stephanie?
I'm doing fantastic. Excited to be here. Thank you.
Great. And how are you, Todd?
I'm doing well, Peter. Excited to have a new guest
Yes.
to our lineup.
Always exciting. So, Stephanie, before we get right into the news, why don't you give everybody a quick intro about Orem?
Sure. I'm Stephanie. I'm the founder and CEO of Orem, and we're the leading provider of a unified API for all things money movement, and especially for real-time payments. So if you're looking to get payments and money movement embedded into your platform, we can provide solutions in under 2 sprints to get you built out, and ultimately most of our payment transactions settle in less than 60 seconds. So excited to be here and obviously comment on this week's very juicy news to be talking about.
Yes. We were commenting before we went on air that it has been a busy news week. Lots of interesting stories to discuss. So let's get right into it. First one I want to talk about, and I think this is a really big deal. Didn't get as much play as I thought it was going to get. Plaid is partnering with Wise, and because why obviously they were TransferWise, now they're just Wise, and basically, why their core product is transferring money across borders, but they offer a lot of their customers are using them for more than that. And now they can link, because before you had to connect a bank account to Wise. You couldn't do it natively inside Wise. And now with the Plaid integration, you'll be able to, do all kinds of, like 6,000 fintechs. I didn't even know there were 6,000 fintechs to connect to, but apparently that's what Plaid has. And so you'll now be able to do it, not just through a bank, not just through a traditional bank, but through a fintech. So super interesting development. Todd, thoughts?
I think it was a pretty big coup, for both sides, I think, to be honest with you, because, I think Plaid, who's best known for being the plumbing and connecting tissue of the fintech industry. One thing Wise is seen as more of just an international player, and I think this move connects them to so many more pieces of the fintech ecosystem. It just shows you how deep Plaid's tentacles go as well, and so I think it's a win-win for both. I was surprised by the news, and I think there was a quote from Todd Baker in there, of all people, which is I think a surprise as well, because he tends to be a bit more, not necessarily negative, but more of a, critic of some fintech and bank moves, especially on the fintech side, who said that, the move is a pretty big deal and will allow Wise to, gain access to Plaid's, pretty big and deep network. So I think it's got a lot of good pieces. The FDIC stuff is not a good thing, but I don't think international people worry about that probably as much as we do.
Yep. Stephanie?
It's a super interesting partnership, and I think what it represents is this opportunity that I think we're seeing grow around what I'm going to call wallet to wallet transfers, as opposed to what we historically thought about as bank or other types of transactions. And I think the classic use case for Wise transfers isn't really to hold funds, it's to get it from point A to point B, right? So that FDIC insurance thing, TBD, if that ends up becoming material, probably not, at least in the kind of current use case. I think it speaks to the power of 2 really big players seeing an opportunity. It's why I love fintech, right? Because sort of anything is possible. It's a matter of just willing into action the connection points that take us from sort of what we're used to every day, like it talks about, like link a bank account, and gets us out of even one more step of friction and into what is ultimately access to money, which is the underpinning of liquidity, financial inclusion. One of the reasons why Wise, I think, is so interesting is that so many Americans send money somewhere else back home to support other families. So it's a really powerful play. Love to see it.
And I love the way you put it there, Stephanie. That it's sort of a wallet to wallet transfer. That's sort of a different kind of thinking that I think is probably going to be prevalent as time
And it goes a little bit against the recent grain of kind of a rebundling of financial services under, whether it be one or a couple of fintechs. It kind of goes back to that unbundling because it connects you to so many different, different potential options.
Yeah.
Well, it's point to point, right? So the idea that you don't have to like go back through a series of bank accounts and transfers, and you can just do point to point. That's going to change the game, in a meaningful way.
For sure. Okay, let's move on. Another article that was doing the rounds this week. Really, this is an in-depth article in Business Insider. If you subscribe, you can really learn a lot about the inner workings of what's going on at Marcus. So basically, this article is about, Goldman Sachs is struggling a little bit with Marcus, and we've all known about the executive departures. That's no secret. They've they're burning cash. They obviously we learned that in their quarterly earnings reports. And I learned several things in this article. Like, I didn't know there was infighting between two of the leaders of Marcus now. That was news to me. Like they're behind on product launches. They're finding that this whole kind of, being a fintech, while it's all well and good, there are a lot of challenges. And while they had every advantage in the book, they've obviously had the massive resources. They didn't have to worry about raising money. But clearly they're probably not doing as well as we all thought they were going to do 3 or 4 years ago.
Seems like they've lost their vision a little bit for what they want Marcus to be. And that's tied back to some of the early departures or big departures they had, because it seems as if there was this clear vision when they first launched it. And even when we had, Swati of Marcus at our USA event, like there was this slow rollout and of all these products. And recently we've heard less of the product rollout, more about delays. We get this article. So it seems like some of that initial vision has kind of either been put on hold or maybe they just are unsure exactly what they want it to be right now.
The co-heads, co-CEO thing, it's such a Goldman thing. It's a very uniquely Goldman thing. So is there infighting? Isn't there? I don't know. If I had a co-CEO, I'm sure we would disagree on a variety of things and yet still figure it out. I think the question isn't, necessarily like, are they behind or have they lost their vision? At least not for me. So much as it is, does speed to market for them actually matter? Because the embedded customer base on the investment and savings platform, the relationship with ACO on the retirement services side, puts a pretty consequential sort of embedded install base right there. So if they want to launch a checking account, doesn't matter if it's this year or next year, right? If there's 1 million, 2 million, 3 million sort of active customers or close in easy prospects versus a startup who genuinely has no brand, no customers, and has to start at zero. So, I think it remains to be seen how the vision will change under new leadership. And I seem to recall that there was a pretty consequential payments leader who joined maybe about a year ago, who came in from Uber, that I think is also going to be, potentially part of this next chapter. It's not a fintech, really. It's a big bank building an innovation layer, and that's interesting. But I just don't think it compares to, what startups are ultimately up against when they start from scratch.
Yeah, and that's what this article really suggested, that they've tried to be fintech like, but it's they're still a big bank. And David Solomon, the CEO, has really gone all in on consumer banking, and he really, I don't think he can afford to have this fail. And as you say, it may not matter. I mean, the checking account was supposed to be out last year. Now they're saying it's going to be out by December. It may slip, but as you say, I mean, they've got like 14 million consumer customers, which is, maybe with the exception of Chime, is bigger than just about anybody in the US market. So they're doing okay. Okay, moving on. This is an interesting one. Tornado Cash has been sanctioned by the US government. It's not an easy thing because there's actually no entity, Tornado Cash. It's a smart contract. It's a mixing platform. And for those, I've first heard about mixing platforms when I was reading Laura Shin's book, Crypto cryptopians, and she talked about the DAO hack, the hack that went really. The person who stole all the ETH at the very start of the ETH rollout, and ran it through a mixer, because what a mixer does, it basically disconnects the sender and receiver of the in a transaction, so you have no idea, because everything's on the blockchain. You have no idea when you run it through a mixer who the sender and who the receiver is. It's mixing all the transactions together. So anyway, Tornado Cash is a mixer being used supposedly, allegedly, by the North Korean government. It's also used by many people who just like privacy, don't like to see if they're moving a couple of $1 million around that they have legally that they just want to make that private. Totally legitimate, but there's illegitimate uses as well. And it's something that it's going to be interesting to see how this plays out, because they said there is no entity of called Tornado Cash Inc. that they can sanction. That they're doing wallet addresses and different things. They're trying to work it out. But it's going to be just so interesting how this plays out.
That's exactly what the U.S. government and regulators hate about crypto and the space. I mean, this is this could be the poster child for what they hate and what they talk about on TV, on how it's for illicit use, and we can't know who's involved in transactions. And I mean, ultimately, there's it when we are as we continue to move into this Web3 blockchain based world, there's going to be platforms that are the other end of the spectrum that just want all anonymity and everything, and there'll be a cohort of people that use that, and my keys, my crypto, and I think that will always exist. That there's no chance that's going to be a large segment of how it's used, and it's not going to be regulated into existence. It's going to be on kind of the far side of the ledger for probably as long as we are in financial services.
Well, first of all, Peter, a huge shout out to Laura Shin. She and I were early days at LearnVest, where I started my tech career. So
I
really?
love that
you happened to create an intersection here. Her book is fantastic for crypto readers. And ultimately, I mean, I think this is the sort of dilemma around innovation in financial services, which is the speed at which a new concept can be created relative to the speed at which regulators can help figure out and create the appropriate boundaries. And I think crypto and the blockchain generally has, as Todd said, been sort of primed for problems like this. On the one hand, I think it's kind of thrilling to see what mixers can do and how we do think about being anonymous in some capacity in a world in which privacy is increasingly more important and valuable to certain users for certain reasons. On the other hand, it puts at risk foundational things that we in the US, especially through sanction screening and other processes, had considered sort of solid footing for the way our financial system operates, with the intent to block and tackle bad actors and money laundering and the sort of entry into our system of economic protocols that don't belong. So I don't say this often, but I think that the regulatory landscape is going to be really important for crypto and its ability to continue to be both mainstream and not be a place where people feel consistently defrauded. And therefore, the brilliance behind what the blockchain can solve in financial services never gets off the ground fully.
Yeah, and I think that's the thing. The DeFi purists, are they're basically yelling at the regulators right now because they feel like this. We need to live in a decentralized world, but the reality is, if there's serious money at stake, the governments of the world are going to want to regulate it, and this is going to be, as you say, we'll see how it plays out. But it's going to be a fantastic use case. But anyway, moving on, I want to talk about Figure. Feels like every 2 to 3 months, Figure comes out with another big announcement that they've been working on. We know, obviously, we've had Mike Cagney speak. He's spoken, I think, at pretty much every lender since 2013, every Fintech Nexus since 2013. Obviously, what he's done with Figure has been really impressive. And now what they've basically done, they've a press release this week. They're now getting into banking as a service, but it's all blockchain-based banking as a service. They're partnering with Visa, which I think is really interesting, because the whole Figure Pay piece is around creating a new blockchain-based payments rails. I'd love to obviously get your perspective on this, Stephanie. And it feels like we're, doing that. Like the whole reason being is real time. People want real time payments. They want to have. They don't want to pay like the figures. Real main kind of value prop that they're going to market with is the interchange. Like you don't have to pay the 2.5-3% or whatever it is, but they're partnering with Visa. Figure has basically written their own core banking system on the blockchain. That's basically what they've done, which I think is astounding. that they've done this. But anyway, so Stephanie, love to get your thoughts here.
Well, I mean, I think first of all, Mike Cagney has always been known for being an incredible innovator and creator. So this is no different than I think a lot of things we've seen him touch. And ultimately, as someone whose job it is to think about the innovation of money movement, it's no surprise to me that there's the beginnings of experimentation to go fully blockchain based for aspects of money movement. I think we will end up having maybe not a full move off of our ACH and real-time gross settlement systems, RTP and FedNow, but we will have the addition of lots of different ways through stablecoin, through the blockchain, to think differently than we do today about core rails and money movement. So I think this is the beginning of probably a category of innovation in the infrastructure space that is going to, like we just talked about, have pros and cons. And so I think as it is new technology, partnering with like a substantial player gives an advantage to be able to quickly get into a place where adoption, which is going to be the primary consideration for new rails, has a chance. And I think if that happens, we at Aurum would believe we'd support that just like all other forms of money movement. And it gets me really excited because it is kind of the first of its kind chance to think about using the blockchain for more than just speculative investing and really get to the kind of core of what could actually improve our financial system in a very meaningful way.
I mean, this is I think the most exciting thing about using the blockchain is if we can get banks or those in the banking system using this, then it brings down costs for consumers, brings down costs for small businesses, merchants, everyone in the ecosystem, and moves everything at such a faster speed than it is now. And so right now it's, as Stephanie can know more than I or even Peter on the payment side. I mean, it just takes too long, especially if you're a small business or a merchant and just waiting and waiting. And so to me, the more stuff like this, the better I think we all are.
Yep. Real-time payments with low transaction fees. That's
low fraud.
Yeah.
I mean, kind of the pinnacle here,
That's a world we can all look forward to.
Yeah.
Okay. Moving on. Talk about some government action that happened. The CFPB fined Digit, and remember Digit, they're a saving tool that were acquired by Opportune last year. I've been a big fan of what they've done. Spoken at our events in the past as well. But they were fined $2.7 million over their faulty savings algorithms, because basically they promised that there would be no overdrafts if you use Digit, because they would proactively move money around from the savings account to the bank account that's actually being overdrawn. But this is news to me. According to the CFPB, Digit have received 70,000 overdraft reimbursement requests since 2017. So clearly it wasn't working. I mean, they did have a very large customer base. I think it was in the millions from memory. So obviously this is, not a good look. Opportune, who owns Digit now, said they don't really agree, but they're paying it anyway. But it's, I don't know how big of a deal this is, but it's certainly not a positive thing for fintech.
Definitely not a positive thing. It's goes to some things aren't I wouldn't say on the up and up, but it's when you're building fast, maybe you break some things along the way. I think and it's also important, I think, for the CFPB to catch these things and to to make sure that they're giving correct oversight, because ultimately fintech, part of its promise has always been better outcomes for consumers in many ways. And clearly this was not a better outcome, or at least what they thought they were getting. And so I think it's important that CFPB has that oversight, but I mean, it's probably not that overall that big of a deal. Probably hurts digits more than anything else.
I mean, I think that the person who suffers here, Todd, is certainly on some level digit, right? Their halo and their brand is affected. But I think about the scale of 70,000 people having an overdraft. And I think about what happens when you overdraw your account as an everyday American. You probably overdraw it 2 to 3 more times that day. What causes that overdraft? So I do think there's actually, pretty perilous repercussion of getting algorithmic decision making right or wrong. And on the one hand, I think machine learning and intelligence layers can be incredibly powerful. What allowed it to get to the point that the CFPB gets involved at 70,000 and not 700? I think that's for me the real question.
That's a good point.
Yeah.
I mean, it just putting everyday American households in a perilous position should be caught sooner. So what is it that is missing from the system to create that flag and to solve this problem before it gets to be, sizable in nature and ultimately, because powering innovation, I mean, to your point, Peter, or to Todd, we have to break things.
Right.
And we don't want to hurt everyday American households while doing that. So where's the balance?
Yeah, particularly when you're saying you're doing the opposite, you're actually preventing them from being overdrawn. Like I was shocked when I saw that 70,000 number. So anyway, moving on to more government action, we had Coinbase revealed this week that they have received investigative subpoenas. I don't know what that means exactly, but it's basically requests for information to Coinbase on many things, including their staking programs. And that's what most of the press that was around this talked about, staking. There was several other things they wanted that the SEC wanted information about. But the staking piece, full disclosure, I have been staking ETH on Coinbase for just 2 ETH, not a huge amount of money, but for 18 months now. So I am part of the program here, and I love the fact that I could earn. It was only a small amount. Like they're paying like 3.25%, something like that. But the thing I didn't realize is that Coinbase, the revenue from staking, it's it basically is, it's consistent revenue and it's growing revenue, and it's 8.5% of all revenue at Coinbase was from staking. I had no idea it was that high. So it's anyway, Coinbase, another I wouldn't say
I'm gonna steal this from Dan Kwong because he said it last week.
Oh yeah.
Where was the SEC when they went public?
Right.
If they had such issues with all this, even the previous issue that I think it was last week or the week before. So they did all, they filed paperwork, they went public. The SEC had to look into their business then. And so why is it now that it's under investigation and they allowed them to go on the public markets back then?
Good question.
I mean, +1 to that question, because ultimately the S1 is meant to uncover these issues. This isn't 8% of new revenue that started since IPO. This is longstanding, perhaps growing, but longstanding revenue. And I think, again, it comes back to, as we work, all of us in fintech in some type of regulatory setting, the way the SEC or FINRA or the CFPB or the OCC is going to come in and at what time is a bit unpredictable. I think, we are always at Aurum on the ready and thinking about, where are the regulators going, et cetera. But I think when you look at a business like this that's recently IPO'd, it is a really critical question of, why not then, why now? And I think investigative subpoenas perhaps sound maybe more grandiose than the reality of perhaps just obtaining more information for compliance reasons. I think the SEC is known for coming in and doing investigations that take sometimes years to resolve. And from financial services and working in an RIA previously, I've seen this often. Often it's corrective issues that just need to happen as opposed to, punitive damages that come out of it. So it'll be interesting to see where this goes.
Yeah, it will be, because from where I hear people who deal with the SEC directly, and sometimes they're just not very nice. And the thing about government is the government runs a monopoly. It's a legal monopoly. They are the regulator, and if you don't like it, there's nothing you can do about it. And so I feel like they're in a position of immense power. And I've heard lots of things. I've read things about the SEC chairman and his aspirations, and it's certainly. Anyway, there's a big question mark on what's the real motivation here. Is it protecting consumers? Who's being, or is it just the SEC trying to enforce their power, shall we say? So we'll leave it at that. No need to go into any more depth. But we're going to end with earnings. We actually, while we got talking about Coinbase, they also reported earnings. Horrendous, I think you could say, was their earnings. They lost $1.1 billion in one quarter. That's pretty impressive. But revenue, so remember Q2 2021, things were rocking in the crypto world, remember? And they did $2.2 billion in revenue that quarter, 808 million. That's a massive drop from year on year. And consequently, they're down $1.4 billion in revenue, and consequently lost a bunch. But Coinbase, they said that they've gone through cycles before, never gone through cycles like this as a public company having to report on their quarterly results, but they have weathered many downturns. I mean, they've been going around for almost 10 years now. So, but any thoughts there, guys?
I mean, we're in the midst of the crypto winter, so I guess some of it's not surprising. Though, I mean, I think the numbers are eye popping, just because of where they were the last couple of years. But I mean, this is going to happen. We see it even in the equities market with Robinhood. I mean, how much momentum have they lost and had to cut off? I think it was 30-ish% of their staff.
I mean, I think we're seeing an inevitable sort of refactoring evaluation, and ultimately you're seeing this across the board in earnings calls, right? I think CB Insights had something interesting, I don't know, this morning or yesterday about the number of times that, market conditions are coming up in earnings calls, and how to think about the fact that, like, in the public markets, this is really happening everywhere. I think in this case, businesses that are derivatives of assets under management do have a lot of revenue fluctuation based on how the volatility of their underlying assets is being affected. And today, as Todd said, the crypto winter, so to speak, is pretty brutal. And, as our stock market rises and falls, we see the same issue with, wealth management trading platforms as well. Maybe just not as in the limelight, given that they're more common everyday things we've gotten used to seeing. But I'd say, yes, it's an eye-popping number. And I think the question is, for how long, right? At what rate does AUM tick back up? Does a new stream of revenue hit? I think it's just a really interesting moment in time to watch what will be, I think, eventually a rebound here.
Right. Okay. Other company reporting earnings this week was Marqeta. Very, very different earnings report than what Coinbase did. They had solid quarter. The revenue was up 53%. The total processing volume, they're really a card technology platform for debit cards and credit cards, and the total processing volume was $40 billion for the quarter, also up over 50%. One thing that I thought was really interesting, well, there's two things that came out that was really interesting. One, CEO and founder Jason Gardner is stepping down. They're on a CEO search right now. He's going to stay on as chairman. And the other thing that was really interesting, Block, like Square Cash, that's what Marqeta powers the debit card for Square Cash and the Cash App, I should say. And 69% of Marqeta's revenue comes from Block. So I thought that's a huge risk to have that much revenue, but clearly there's it's a great partnership for Marqeta, but obviously somewhat risky.
Well, as a growing fintech, I'm waiting for a Cash App to walk into my life, and I'd love to have that problem.
Right.
That's a good point.
I mean, listen, Affirm and Peloton are essentially the same model, right?
Right.
There's often, I think, Venmo and Plaid, like there's often like an X factor customer that just happens to hit at the right time. So I think, it certainly, like, it is a lot of concentration, and probably a signal that as leadership changes happen and a new CEO comes in, probably time for some innovation, right? A net new product line, launch of some kind that begins to build that muscle for diversification away from single line of business and a lot of concentration.
Okay, so the last one to talk about is Upstart. We're going to go back to a pretty negative quarter. They revenue was up, but the bottom line was down. So that Q2 of 2021, Upstart made $37 million in profit. In this past quarter, they lost $30 million. But and CEO Dave Gerard, who obviously we've had speak many times, he's basically said it's disappointing and unacceptable, and they're doing everything they can to turn this around. But one interesting stat I just wanted to highlight: 73% of all loans that went through Upstart were instantly approved. Of the 73% of the approvals were done instantly. I thought that was a positive stat for them.
Yep, that certainly was. There's a lot of headwinds in fintech right now.
Yeah, particularly in the Linux space.
Yep.
Sure.
Well, and I think anytime you're using non-FICO based underwriting and in artificial intelligence, you're dealing with two very new variables in figuring out underwriting. So on the one hand, it's opening the aperture to financial access, which I always think is fantastic. And I think if you look at this, it's showing that the maturity of those models doesn't reflect what happens in an economic downturn where interest rates are high, other loans may be defaulting, and consumers are constrained, right, at the gas pump because of inflation. And so perhaps in the 10 years prior history of financial information used to underwrite those loans, this problem of today wasn't prevalent in that data, and that's hard for machine learning. Machine learning is backward looking, not forward looking. So as we hit these bumps, those platforms always end up finding that they don't have the pattern recognition
particularly today, where the patterns are really strange. I mean,
very strange.
It's just been an unusual couple of years. Anyway, that's all we have time for today. Stephanie, you were great. Thank you so much. Todd, thanks as always. Before we go, though, one quick reminder. We have Dealmakers West coming up on August 30th and 31st. It's happening at Laguna Beach, California, beautiful Orange County. We're still a few tickets left. Go to fintechnexus.com to find out more. With that, we will bid you farewell, and we'll be back same time next week. Thanks, everybody.
Thanks, everyone.
See ya.